Good morning, everyone. I'm Rhonda Burkhart with HCC, and this morning we are discussing the fiscal year-end checklist for USAS, inventory, and then Tanya will be presenting the USPS one after a short break. And we're going to be going ahead and I'm going to share my screen. All right. And so we always have our presentations recorded. We're recording that right now, and they will be shared with you later on when they are loaded up to the YouTube site. And we have those there, and they will be there. And so to get to that, you go to Finance, State Software Links and Training. And then we have it here on our HCC training recordings. And we'll list those at the top here, right under the HCC recordings topics, and right above that inventory refresher which we did recently. And then any guide will also be uploaded. The accounting and inventory guide will be loaded to the accounting and inventory page right under the guides here. And the payroll one will be also under payroll with a guide right here. So you can see last year's fiscal year and checklist was right there. So we'll put the new one right under the guide chronology there. All right. So we're going to go ahead and start diving right into that checklist, because it's going to be an in-depth, kind of fast and furious type thing this morning. So first we're going to go through, nothing really too much has changed. There's a certain thing in inventory which we're going to talk about, which we need some information from the districts, and we'll reach out to you when your time comes. So just the central office square footage under core organization, make sure that is filled in and or updated in case you have a new office. I know several districts have new offices, so they will need to do that. And so here's the demo and the core organization right there. And you would update that right here with your central office square footage. All right. And then save that. And then your building profiles, make sure those are all in. Again, if you have new buildings and you want to update that, please do. That's got your square footage, busing and lunchroom percentages for that. And then there's also a report which you can run in the report manager. And you want to make sure your transportation and lunchroom percentages total to 100%. And that's going to be under your periodic, your building profiles here. And so see, I've entered in a high school, middle school, elementary there. And then if you need to edit that, make sure IRNs are correct. You've got square footage, transportation, lunchroom. You'll do that for all of your buildings. And then you can use the under there. There's your building information. You can run that report. And that will be provided for you right there. That's nice and handy. That's got that. And then just make sure those are 100%. All right. And a lot of districts, we've been arranging some time together, some quality time to update accounts to reflect the new USAS manual changes. So if you need to schedule time, I'll be glad to do that with you to run through that, what you need to do. We've been using, for some of those, we've been using the mass change. You can do that for some. We've also been pulling down accounts, modifying what needs to be modified, whether it's a terminology change or something like that, and then you mass load it back in. So we can assist you with that. Again, the VAL Act will help you with that. You can run the VAL Act and or account change is another one if you need to just totally change things, you can use the account change. So you'll want to run it first time is true, second time is false for the 0 amount, so you capture everything. All right, again, inactivating account, kind of going on same train of thought there. Mass change, you can use that under the core accounts. Those should have that. If you don't have mass change and you're eligible to have that by your treasurer, please contact us. That's a very valuable way of getting items accomplished and changed quickly and easily, rather than going into each account to change things. Mass load is another way to do that. You can download your account, make sure you have the correct headers. I can assist you with that if needed, and then change what's needed, and then you mass load it back into the software. So again, right here, it's like, it's very helpful if it's, you know, you're changing from one year to another, and maybe your account description says FY26, and the new ones you want FY27. You know, we can make that change very quickly with the descriptions and upload those. This is an example of the mass change where you can inactivate accounts. This is an example of the mass load, and you choose your file in the CSV with a appropriate headings, and you can load those in. A couple of different ways to do that. You'll want to run your OPU listing and make sure the IRNs are correct. So that is under I think it's, oops, sorry, clicked the wrong spot. Right there, you can run that and generate that report. I think I did that yesterday. There it is. Save us some time here. And then it's noted which one is the central office on there. You can check that off, but you can see there's everything's listed here, OPU in the description and the IRN, whether it's central office or not. Okay, maintenance of effort, you'll want to run that. There is a special budget summary, which is maintenance of effort, which you can run. Some districts have used like an Excel format, which helps. So that's located again in right here. You can generate that, and there's a special account filter on that. It's like in the report, so you wouldn't fill that in anywhere. And then everybody's favorite, closing out all those purchase orders. So I had a question yesterday about closing out purchase orders, and do you have to do them one at a time? You can do them one at a time. There's also an option to import into AP, but it might take just as long because it's quite a lot of things that you have to fill in on that spreadsheet before you import that. So we can discuss that if you'd like to do that option. I can give you the template and you can fill things in. You can also look at the outstanding purchase orders with their encumbrance, or just there's a canned report and you just fill in the status outstanding. What we're trying to avoid is these carryover encumbrances going into next year, because then that will have to be figured into your overall budget, the things that are flowing over, as well as what you're budgeting for. Okay, and here's that canned purchase order report, purchase order detail, and under the status, you would just put outstanding in the drop down. You can run that to get those. And there's several ways to close purchase orders. If it hasn't been invoiced yet, you can amend it, and then you would just like do the circled X to cancel out that line, and that will just draw a line through the whole thing. If you have invoiced part of it as a partial, then you would just put in a closed PO as an AP invoice as a cancel full to cancel out the remaining part of each line. And then if you have you've had the good fortune to have done that in the current period, then you would go into the AP invoices and then switch it from partial to full. I don't know if we have any of these that are, in August 2021. Let's see if we have anything like this here. Yes, okay, we do. So here's one, like it was full and you wanted to make it partial. So this is the area under the AP invoice. You would select it, and in our case, we would want to change it to full. But in this certain one, you know, it would be, oh, I still have something to invoice, and then you would see it says the change status from full to partial. Reverse case of what we're looking at to close a PO is if this was partial, these would be full, and then you would click on that to change it to full in that case. All right. And then we have the old outstanding disbursement. So you can run a report for the outstanding disbursement. You could generate those and see what you have for outstanding checks. And you might want to close those out if you know, if they're very old, you know, you could close them out, and then otherwise you'll have to go through and do the where you have to reconcile it for in your new fiscal year, reconcile it and then refund it in the new fiscal year. Any kind of account filters or monthly report bundles, now's a good time to review those to see if you need to add or adjust any account filters. We have a report for that. So it's this account filters report with filter. And you would generate that. I think I ran this yesterday as well. Filters report. So here's this. So you could go through these, and usually it's the SACs that are needing to be adjusted or added to. So if you have something that, you know, maybe needs to be added, if you had something specific, I'm gonna find one with an SAC down here. I don't know, maybe if you had something that was this 9122 and it needed to be add the next year, you can change this to 912%, and that will get you to the end of the decade here, and it will get everything before and after a certain year. So that's a nice way to do that, is like if you do like 9918 here, you know, you could do, you know, if you have to add a row, you can insert one in, make it 992%, and add everything every year in the decade here. Then it's something you don't have to deal with for another few years. So it's always good to review those. Also, if you have any report bundles that go out, I don't think we have any sets here. Those are going to be in utilities and the job scheduler. Okay, and you would go in there. We don't have any right here per se, but you can adjust the email in there. So it's good to go in and just look at who they're going to and kind of just go through that process and to say, oh, well, maybe this person moved on and that person replaced. So you can change the emails right in the job scheduler. But if you're adding a report or anything like that, then you need to change that. You know, you'd have to like reschedule the whole thing if you change something in the actual report bundle. And let's see. So adjusting account filters, reviewing those, adjusting report bundle. If you're adding new accounts, so if you're adding a new SEC for funds for the new year, that will be done through the cash account and view. So that will be here. We'll just pick a 500 series. You know, a lot of these are going away. So for example, if you have this one, you know, and you happen, you'd go here, I hit the view button, not the edit button. And with that, you can mass add and add in this, the next series of accounts if you need to do that. That will create all the different, the cash, as well as the appropriation, the revenue and expenditure associated with the prior year. If it was 99126, it's going to be, and the same ones are going to be added for 9127. All right. You can also, if you've added those and they had like a fiscal year 26 on there in the description, we can download that series of accounts, change the fiscal year 26 to fiscal year 27, and then we can mass load those back in. That makes it easier than going into each account and touching each one separately. We can get that done fairly quickly. All right, so now we're ready to add in the new requisitions and purchase orders. You can open July. July should be open and not current because that's going to change your year-to-date balances. So that would be done just basically as you normally open up a posting period. And so you just create, this one, you just create your July. And we'll just say it's 2026, calendar year. Don't mark the current box and create that. All right, and then you want to make sure any open requisitions have either been converted to POs or deleted. So undeleted recs will cause the fiscal year to date and unencumbered results on the expenditure accounts. So you want to make sure all your requisitions have been addressed. All right, and then you do the usual month-end closing. So you're going to be making sure everything's in for the month for either receipts or any kind of adjustments that you need to do through that, and any checks cut for the end of the year, make sure that's done, make sure all that stuff from above is taken care of. Purchase orders closed, requisitions deleted or converted, and then you want to do your bank rec. And I'm probably going to say this about 3 times, but you have to do your bank rec in June because that is going to be in your reports, which is going to be sent into the data collector. So that's going to be in your periodic and your cash rec. And so you'd create that. So you do June. And if you've been doing this all along, you can just clone it. So we'll just say this is May or something. And then you can just clone that. And then all you do is you put in your balances, you fill in your outstanding checks from your report that you generate off of USAS, do any other kind of adjustments, and then you just make sure that your report, the amounts that you entered, tie to your fund balance. So, and then you can print a nice report, print it out, or just say that, and you're all set. And that will be pulled out with your information, which is going to be sent to the data collector. All right. So we're not going to do it yet, but the monthly report funder will run when the period is closed. Not time to do that yet. That's the monthly closing. And then we have to address the things which we need to take care of with the fiscal year and closing. And these are, a lot of them under the periodic, just like the cash rec. So again, the cash rec, emphasize it again, has to be done for EMAs. The federal assistance summary and detail, the summary has to be done before the detail. It's not required for the EMAS extract. Districts use it for other purposes, so it has remained on there. It's not a requirement, but if you find that useful, you can complete that. So, and then the civil proceedings, that has to be done. If you don't have any, I gave an example here of what you can do to put one in, just so that it satisfies the system that, you know, that step has been completed. Okay, very important. We've had a few districts that have had issues and have been contacted because they didn't do this step. So under the system configuration here, that's why we highlighted it, the EMIS SOAP service configuration, please make sure that says 2026. Otherwise, it's going to pull your account information from the wrong fiscal year. So that's going to be under system configuration, EMIS SOAP service configuration, and you just make sure this says 2026 and then save that. So it's caused, you know, it's caused time issues and, you know, contact with from the state, and, you know, it's like we're always trying to save you time and, you know, just eliminate issues, and this is one thing. It's only like a couple of times it's happened in the past, but if we can save you a little bit of time, we'd like to. Okay, so to pull the file under the extract, you're going to do the EMIS. It's going to create an SEQ file. We do not need the flat file editor anymore, so it goes straight into the data collector. And instructions for the data collector. First, we're going to show you extract, and this is where you get the EMIS file, and you'd update that for, you know, your new fiscal year. This is, you know, obviously in the past, but you'll update this to 2026, generate the extract file, and then you'd go into the data collector to do that. We also have those. The guide for that, I believe, is under here, the data collector fiscal year end instructions. It's right here. And we're glad to help you get those loaded. There's a bunch of steps in there, but the thing is you don't need the flat file editor anymore. Okay. So here are some good dates in here. You can do your financial collection. I don't know why they're just opening it up early. I don't know anybody who would be done that early, but it's open. And then it's open until August 29th to file that. And then your budget, submitting your budget. Here's the dates for that. Okay, this is just a list of the fiscal year reports. I just wanted to emphasize with this that these are done for the entire fiscal year. So it's going to take a long time to do these. So when it comes time, closing out June, you need to give it plenty of time. So just make sure it's, you know, maybe before you go to lunch, or when you're in a long meeting, or at the end of the day when everybody's gone home, and make sure your current period is set to June, because that's going to have fiscal year end dates on it. You want to make sure current is June when you close June. All right. And then if you haven't created July yet, you want to create it. Usually a lot of districts jump ahead and they can get their requisitions in, and they can get their POs created, and that's as far as they want to go until you get June closed out. All right, there we're talking about don't select a current when you're creating July. And when you do close out June, make sure all your other periods before June have been closed. I'm just going to emphasize this. There's some districts that don't close the month as soon as they close out when they finalize it. So right over here, and so this would be the action to close. You can see under the open column, it's true. And so then this would be the current, which is in green. So to change it to current, you just highlight the circle check mark to change it to current. I've got a different month there. See, and if you change it to July from a prior year, it says make sure about the changing the current period. It's going to change the current fiscal year. So you wouldn't want to do that before you close out June. All right. So again, emphasizing it yet again, it's going to take a long time for the reports to generate. And if you have any of the report bundles, like a lot of districts, they send out a bunch of different report bundles at the end of the month, or it's going to be at the end of the fiscal year as well. And it takes time to do that. So just make sure you give it ample time. You'll want to check under your job scheduler to make sure, this is a demo, it doesn't show it, but it will show under here all the different jobs. And if they are completed, or maybe they might be pending, they're not done yet. And then also under the file archives, this one doesn't have it, but just make sure all the reports are generated for June and for the fiscal year end. I think the last report has like a void report in it. That's the last report. You want to make sure those are all populated in both tabs before you proceed. And then once those are done, then you can make July current. All right. And that's that for that. That's the end of June. You can reopen it. There's a rule to prevent opening a previous close period. If that's not enabled, then you can reopen June if you need to go revisit that. Okay, and then after July is open, then you'll need to review if there's anything under the transactions, pending transactions. That's usually your first July payroll. Make sure those are posted. That's going to be under the pending transactions. If there's anything here, you need to review that and post that as needed. All right, also, if you are a district that numbers your POs with the first two dates, or first two numbers of the last two numbers of the fiscal year, so like 27, that can be done under system configuration transaction description or configuration. And so what it does is it wants the highest PO number, not the first one you want. So you don't want to fill it in as 27001. You'd want to fill it in with like 27999. So that is under system configuration under transactions. Okay, so here's like this one is the example. That's been filled in as 27999. So I want to make sure if you're one of those districts that is the case. I can assist you with that if needed. And then again, we're talking about reviewing your account filters. If you didn't do it before, it's a good time to do it now, heading into the new year. And also, another thing is the requisition prefixes. Some districts have those. If they like athletic director 26, and then they change the requisition number to athletic director 27. So that would be done. System, users. And then I think I had something in here. Maybe I didn't. Okay. So it would be done, say, for example, this one. I'd want to review that. So if you had a state was 26 for last year. You'd update that to 27 and then save that. And then we should be starting off with 8027, like 01. Okay. So there's an example of it right there. Okay, after your fiscal year in closing, HCC takes care of the auditor state report, sending that up to the state. That's already scheduled. The gap extract program, if you use the gap extract, that is right here. And then you just fill in your year. It would be 26. And then you'd submit that. You do that. And then if you need more information, there's a link there for the WebGap. For the new fiscal year, you're going to be running your certificate available balances in your amended certificate reports. Certificate of available balances here. Okay, you need to submit those at the beginning of the fiscal year. And the estimated resources as well. Again, I'm talking about those account filters. That's been a question in the past. I'll just say that. Again, the job scheduler. Yeah, here's a nice example of that I added in here. So I had one like it was rejected. You want to make sure they're not failed or rejected. And that can be from email addresses in the past that have been like inactivated. That person doesn't work anymore. So you'd want to look at this send to address way down here, edit that if needed, and save that. So that's a good thing to review. And then we're talking about future requisitions that you can enter in advance. It was 7126 type requisitions were also mentioned. The requisition approval workflow, not too many districts have asked about that, but it is available if you would like to activate that in your USAS. The account payable report is something else that you'll need to run for the auditors. And it's important at this time that you make sure that you have a receive date entered into your invoices. That's right here. Also, if you enter items for inventory, if you use the inventory program, you'll want to make sure anything that's for inventory is marked. The box here in the EIS is marked for inventory. That's the important thing. That makes it a lot easier because then you can just pull those items over into inventory. It makes it a lot easier than hand typing everything or running a spreadsheet of items from USAS and hand typing that in. A lot easier to do it that way. So that's going to default to June 30th on the account payable report. It's going to pull in the items with a received date before or at the end of the fiscal year up until June 30th, and then they're paid in July or afterwards. So here's an example of that report. So here you can see the received date were in May, and then they were paid in July. And so then it lists the payable amount. The Ohio checkbook, that's something you can, if you do or you elect to do, you can contact the treasurer of state if you don't do it already and would like to. One of the things that we need to make sure that we do is make sure your date ranges are correct. We've had an issue in the past, I know there's at least one, where the same date range was submitted and that like doubled their numbers. So you just want to make sure, you know, just check and make sure you're not submitting things twice with the same date range. And so the Ohio checkbook is another extract. Okay, so you would put in your date. So maybe if it's 7/1/25 to 6/30/26, you can exclude items if necessary. You can generate or you can generate and submit. It takes care of it one fell swoop. Okay. So there's an example of the screen that I have there. And then it has a message that it was sent successfully. Here, and so it's got all those fields on it that it sends. And that's it for USAS. So I'm gonna stop sharing for a moment and check to see if there are any questions on that. Otherwise, we will just move straight to inventory. All right, we're going to go ahead and move to inventory. All right. Brief break of 20 seconds about this. All right, so inventory. The key thing on inventory is back in, I believe, November, there was an update. And instead of taking the original cost from the item screen in the original cost field, they're pulling the acquisitions from the total of the acquisitions for that item and using that as the original cost. So we've found, I've done this for a couple of districts, we found the issues were like from the migration, there were items which did not have acquisitions, which were mostly dated back like in the 1960s and the 1970s, and those weren't included on the acquisition. So there was a difference in these values. And so doing so, SSDT developed a report. I'm going to move over here. So there's a new report, the acquisition original cost mismatch report. And so I'm starting to go through the district, been through a few, corrected two. And so you want to just summarize it as you wish. And then your item statuses, they're active, or possibly sometimes they're called new item on the statuses. And then you would generate that report. And then you get something similar to this. So you can see, we'll just go down to this one. So this is the original cost, and that's the acquisition. We're going to go down to this first one, 001429. So you can see here it says it's 117, but there's nothing in the acquisition. So you can see on one report, it would be one value, on another it would be a different one. Your reports aren't going to match. So, and it's going to be a big old red flag for the auditors. So like 1429, let's see, item. So you can see here. So here on this one, you can see very faintly that the original cost here is recorded as 117. So that's where it's pulling for that report for the one column. And then if we go into the acquisitions, whoops, there's nothing. Okay, so it's like it needs an acquisition there to, balance out. So what we need to do is, of course, because these are in prior fiscal years, so I think these were actually in the, usually we're finding them from the 60s and the 70s. I think this was like 1993 or something. Prior fiscal year, I have to actually go in there and add these acquisitions. So I do this in test, verify, run the report, make sure that your ending balance for your prior closed fiscal year equals your beginning balance in the test system. When those equal, then I reach out to the district and say, okay, I want you to verify this. Let me know when you're ready to proceed in your live system, or if you have any questions or concerns. When the treasurer verifies that, I do it in the live system, and then you're ready to move on. And so in that way, we are preventing issues before they happen. It's, it's just so much easier if it's like we're catching the fall before it happens. And, the auditor's not going to have a comment. So, and they're going to be like, oh, great, you're up on it. You adjusted for this. So that's what we're taking care of. And so I'm going to be reaching out to districts, asking them about this instance. And the key is this report. I need this report sent to me from the prior fiscal year because those aren't in like a file archive or document store yet. So I don't have copies of those. They were emailed to the districts at the close of the fiscal year, the last fiscal year that was closed. So I need a copy of that. You can send that to me. I'll create a ticket, and then I can move forward to correct your district. So, and it was a programming change. And just because of that, we have to make sure there's acquisitions that total the original cost, which makes sense. So we'll be reaching out to you one by one. All right. So that's that project. And then pre-closing instructions. Here we've got to basically add all your items from the fiscal year. We reviewed that on our previous webinar on how to do that. Make sure those items are added. Then we're going to make sure that the acquisitions and disposal are added as well. Enter any transfers. So if you have anything, I'm not sure if something would cross an asset class, I'm sure it could. But if the funder function, like maybe you're in here and so there's your items where you'd add your items, acquisitions, dispositions, you add those. And then transfers. I don't know if we touched on this before in the last webinar. So you'd create that, you pull open your tag, whatever it is. You put the date in that you want the transfer to be in. And then are we crossing, where are we going? Which one are we transferring it to? So maybe, I don't know, maybe it should go to food service instead of the general fund. And then you create that. And then there's a report. Okay, and if error adjustment, that's if it should have been done in a prior year. And then it'll be in the error adjustment column. But otherwise it'll be in this current year. So that's the transfers. If you have to do anything with depreciation, we'll talk about it in a ticket or over the phone to address that. Any kind of things with changing your capitalization threshold, we can discuss that as well. Those are few and far between. And then we just talked above about the acquisition original cost mismatch report. We covered that. Okay, and then you might want to run some reports beforehand and just check things out, make sure everything's as you need it. We have all these gap reports, fixed asset by source, function and class. All that tells you which ones to run, and the depreciation reports as well, and the audit report. The audit report can be very helpful. You can run that. So that is located. Reports in the gap reports. So all of these fixed asset by function and class, by source, depreciation, fixed asset report. I've been using this one a lot for the original cost mismatch, finding those. Yeah, so you run that. And then you can show I always show the report options and generate that. So I've been running that a lot. It'll show your total balances and then it'll just show the change. So you'll get like your original cost and then the ones that were added and then the change. And then down here, here's that original mismatch report. Here's that audit report. When you do that, make sure you do it for the full. Yeah, and And this one also, I want to point out, it is from the entered date. Okay, so if you're entering items for the last fiscal year in the beginning of July or something like that, kind of make a note of when your entries for the last fiscal year end and your entries for the beginning fiscal year start. So because this audit report will use your entered dates, not the date of the item. So that's important to know. So maybe, hey, I was still working on that in July. I got done, started entering the new stuff in September. And then you want to make sure your stop date is the date that you stop entering the transactions for whether they're acquisitions, dispositions, you know, you're entering your items, whatever, transfers, you know, whenever that stopped, that's the date you put in for the stop date, not your fiscal year. So it's just using your entry date for this report. And then you can have stop or sort options, date, tag number, or whatever, whatever is useful for you. And just make sure you run that and keep a copy of that. Very handy to have. All right. So, and that's what I've stressed here. Okay, there's some other reports that are good. The book value report's nice. The brief asset listing report's nice. So that's good. And then I've added some things that SSDT passed along to us, like balancing the gap reports and what the gap reports exclude. They exclude items that aren't in the capitalization criteria. They don't meet that. Items which have been disposed of inactive or old tag item, and any kind of operating leases. Those aren't in the gap reports. So that's important to know. And then the different original costs should match. Okay, so the source, the function class, and the change in fixed assets. And a helpful little hint, fixed assets by source pulls from the acquisition. So when I ask you for the reports for the inventory original cost correction, I'm going to ask for the fixed assets by source report. Okay, and then the function and class pulls from the items. So you want to make sure your source balances with a function and class to make sure those are all working and balanced. That's the thing we're trying to correct for this year. All right, and schedule change in fixed assets. We want to make sure the beginning balance, beginning value matches the prior year ending balance. Also a thing that we're trying to deal with for this year with that change, and also for the depreciation as well. Okay, so just different things for the book value report. And then you want to make sure if you haven't closed the fiscal year yet, you know, your reports are going to look different if you move into the new fiscal year. So they're going to have the same value. They won't have that depreciation on them unless you have closed that. So for your depreciation. So just be aware of that. Okay, and don't close your fiscal year until your GAAP auditor says you can. And we're coming out also, once we get this email configuration item addressed and completed for all the districts, we're going to be moving into the document management part, and that's going to be under, show you where that's going to be under system, in the document storage. That's not, see, it's not activated yet. It will be in the future after we get the email configuration. It's kind of like one step at a time. So that's where they'll be, instead of being emailed to the district, the reports will be in this document storage. And if you want to upload those prior reports in there, which would be helpful, we can get those uploaded in there as well. Okay. All right, and then you'd create the new fiscal year when everything's all done. You're ready to proceed with a new fiscal year. That is going to be in the fiscal years. And then you would create that right there. I've already done it for this. So it would just be 2028. And it shows your limits that are there. And your capitalization criteria shows those. I actually just updated those, so that's why it's different. All right, kind of fast and furious. I wanted to leave a little break between USAS, inventory, and the USPS for people who needed a break. They're doing both. I'm going to stop my sharing and just check to see if there's any questions. We're going to be circulating the checklist after the end of the presentations today. Any questions? We're always available by ticket. You can give us a call. Whatever you need, we're here for you. All right, I'm going to take a brief break here and we'll restart the recording at 10. Perfect.
Okay, welcome back, or welcome everyone. I am Tanya Chase. I'm going to go over the USPS checklist. Trying to get my screen back here. Okay. So USPS, first and foremost, please begin reviewing this checklist now. Please do not wait until after you've run your final pay in June. There's a lot of things that you can begin working on now to make that process easier for you. And there's also a couple of things that you need to make sure that you complete prior to completing your last payroll. This checklist I did send out. I have not made any changes, I don't believe. And if I did, they were minor, simple little typos or something like that. I do have another document that I kind of forgot about. I will circulate that after the meeting today. It is the EMIS scenarios for fiscal year 26. We'll discuss those and I'll get those out. Nothing has changed. So if you have prior years versions of that, it's the same, just updated the dates. It looks like EMIS is closing a little bit earlier this year than normal. So you have a little bit less time to get things entered. So we will begin here. You have to run your STRS Advance. STRS Advance is the same as your STRS annual report. In USPS, we refer to it as Advance because that's the process that we're doing. STRS refers to it as their annual report. So if they email you in August and says, hey, your annual report is due, that's the STRS Advance. But that report does need to be completed before you can process any payrolls in July. So please make sure this is on your radar. I have had districts in the past where it wasn't on the radar and it's a couple days before they need to run their July payroll. And I'm like, hey, you haven't run this. So just make sure you're paying attention here. The system will not let you, if you try to initialize a payroll for July, it is going to say, hey, we can't do this. You haven't run Advance. So, okay, first thing on the list here is cost of life insurance over $50,000. Yes, we talk about this at calendar year end and fiscal year end, because if you have staff members who have forward paid life insurance that is over $50,000 and they are leaving your district at the end of the contract, you do need to process their NC1 or life insurance amount. That needs to run through payroll. in order to save your sanity. If you do not run it through payroll, there is a manual process to get that added to their W-2. It is not necessarily a fun process. I've had districts had to do it and they don't enjoy it. So you do need to run that through your future pay. So again, that is employees that are leaving you at the end of the fiscal year before you process their final pay. You need to process their life insurance over $50,000. If you do not already have a calculator, we have the calculator for that on our website. So if you go to finance, USPS payroll, under guides, we have the USPS life insurance guide and NC1 calculator. You can download that. It's an Excel file. Oh, wrong screen. Yeah. So you have some instructions here, and then the calculator is actually this yellow tab.
I was going to mute mine.
Populate stuff in there. Okay. So that is how you can get the amount that needs to be processed through payroll. So please do not forget that. Please have that on your radar. That is one of those things that once they've been paid out, you can no longer run it through payroll. You will be stuck with having to do it manually. Checklist. Okay. Step 2, I already did that for you. You're welcome. This is just the process. It's just making sure that your advance amount from last fiscal year has been paid back in full. If you were a district that was still in advance because you didn't pay it back in full, you have been notified. We worked together and got everything cleaned up. So you can check off number 2. Number 3, so this is running your actual STRS advance reports. I'm going to go into detail about them later. Just know that you can begin running these right now. You do not have to wait. We'll talk about the difference between what you're going to see running it now versus what you'll see running it after your final pay of the fiscal year. But you can start looking at those now. In fact, I have a couple of districts that have already cleaned things up. I have appointments with a couple others to get things cleaned up. So please start looking at those now. Number 4 is staff EMIS reporting. First thing is to clear out long-term illness. I saw that come in. A calamity day in the middle. Well, first of all, I'll hit that in just a second. So clear the long-term illness. If you have long-term illness in your employee screen right now, it is most likely from last fiscal year and does need to be cleared out. At this point in time, most districts have done this because it's been an EMIS error. To do that, if you haven't, you can go into USPS. And you would go to core employee. You could filter your grid. So if you don't have long-term illness on your grid, you could add it by going to more. And then it's under state reporting, and you could add the long-term illness. This is not required because at this point in time, everybody should be 0. So you could just go to, without filtering your grid, just go to mass change, load definition. If you do not have mass change, let us know and we can have that conversation. As long as it's approved by the treasurer, we can add that role for you. But under load definition, everybody already has this, this mass change, but it's clear employee long-term illness. You would check that and then do execution mode and then submit mass change. It's going to clear everything on your grid, but that's fine. Everybody needs to be 0 anyways. So it's not, you don't necessarily need to filter. You could if you wanted to, just to see what was in there, but you do not have to. So once it's cleared, your next step is to add your long-term illness for this fiscal year. So long-term illness is an EMIS requirement, and it is 15 or more consecutive absences due to illness of a staff member or a family member. You can include sick and unpaid days. I do not believe you're to include vacation or personal leave. It actually causes an error. The question was if there's a calamity day in between. I cannot swear to this. I think this would be a question to direct to your EMIS coordinator, but I would think that would still count, because had that not been a calamity day, that employee still would have been out and they still did not come back to work. What breaks that 15 consecutive is if they come back to work. So like if you had somebody that was out 14 days and on day 15, they came and worked half a day and took the other half day sick, that breaks the cycle. Therefore, that doesn't count. A calamity day, I don't believe breaks the cycle. That's my opinion. I'll make a note to check with EMIS. I can send that out once I know. I'll send it with the EMIS scenario. So again, it's 15 consecutive days. So this can be a bit of a tedious project to find. I used to kind of keep a list of my staff that had been out for a long period of time. And then I would notice, pay close attention to them at the end of the year. I know that's hard to do. So there's a couple of different reports that you can run. I personally would start off by, there's no report that you can run that says, hey, 15 consecutive days or more. Unfortunately, we're on our own to come up with this. So my solution is to run the ABS 103, which is a summary report. And then I would go through and kind of highlight my people that had more than 15 days. Then you can go in and run the ABS 101, which is a detail report, and see if they are consecutive. So those reports, they're under reports, attendance reports, and you have the ABS 101, ABS 103. I know those are horrible names. They came from Classic. I don't know why they didn't rename them. But the 103 is your summary. I don't know if I will. So I've already got this set up. I'm running this for my entire fiscal year. I'm only looking at my job status of active. I only want to look at my sick and dock time. I'm not looking at any specific building or department or pay groups or employees. I just want everybody. I have no idea what I'm going to get when I run this report because it's a demo, but we'll see. So these are my employees. Sorry. These are my employees, and this tells me how many absences they have had in every category. So 3 days, 6 days, 6 days. I'm not worried about these people. This Emily here, she had 15 days. She's on my checklist. I need to see if those were consecutive or not. Do watch if you run this, if you have staff that use leave in hourly increments. Obviously, these numbers are going to be much higher because they're hours. So do take that into account when you're looking at this. So now I know that Emily Lindsay is a question mark, so I can come back in reports, attendance reports, ABS 101 now, because I need the detail. Again, I've got my fiscal year dates. I'm only looking at my active people. I'm looking for absences, dock and sick again. Those are the only two absences I care about. And then, oh, look, funny, I have the exact same settings. So now I have Emily Lindsay added down here. If I had multiple people, so if I needed to also look at Brent here, I could add him. I can, or I could run it for everybody. It's just going to be a really long list. So now I can generate that report. And this report gives you daily. So I can see every single date that she took, and I can say 13, 14, 15, 16, 17, 18 are going to be, that's your Saturday and Sunday. They don't count. So I can go through here and say, yep, these were consecutive, or no, they weren't, or whatever. And so let's just say these were consecutive. They weren't really, but I'm going to say they were. So if she's on my list, I'm going to count those up. If she had 15 days right here, and then later on in the year, she had 30 consecutive days, that's 45. Those get added together. So anytime there's more than 15 consecutive days, you add those together. Those then get added on the employee screen, however you want to get there. So I would find Lindsay. I'm going to edit her employee screen. And then you have to find it, and it's down here under state reporting, and I have long-term illness, and I'm going to put the total amount of her consecutive days. So maybe it was 45. And then I'm going to save that. Well, don't save it then. Okay. So that is your long-term illness. You want to make sure that your staff members have EMIS days. So if they are a contracted employee on a calendar, that's where their days get picked up from for EMIS. You should not really need to do core adjustments for your EMIS days unless they are not on a calendar and or you are not putting their absences on their absence screen. So typically this is going to be only used for maybe your coaches. If you're not entering attendance, you may need to do EMIS attendance days for them to get those days reported to EMIS. If you have a CC or CJ record, those get entered under core EMIS entry. We don't have a ton of those. And honestly, I kind of struggle through every time I have to help people with this. So if this is you and you have a CC or a CJ record that needs to be entered, put in a ticket. We'll walk through it. Never find my checklist. So you also want to go ahead and start updating your EMIS related information on the position screen. So this is where our EMIS reporting scenarios come into place, which I have not circulated, but I will. It looks like this. There are different scenarios. So depending on what is going on with that specific employee and when they, basically it's when they resign. So right now, today, if you have a list of 10 people that you know are resigning and you already have their letter and it's been accepted, you can go ahead and go to their position screen and list them as separated and their reason. That way it gets reported to EMIS this year, this fiscal year, and next fiscal year, you no longer have to report them. So that is on, I'm just going to pick on somebody. So this is on their position screen. It's under this EMIS related information. So the two fields that you want to fill in is their separation date. So if their letter says that their last day is the 31st, May 31st, because they're retiring June 1st. If they have a last day, maybe they've dated their letter for August 5th because they need insurance through August because their new insurance doesn't start until September, whatever that reason may be, make this separation date at the very least June 30th of 26. If you try to put it into the new fiscal year, it can cause errors. So go ahead and just use a June 30th date, and then go ahead and update your separation reason, whether they're retiring or they you don't know why they're leaving, they're just leaving. Those are the only two fields that would need to be populated for EMIS reporting. Then once EMIS closes at the end of July and you've confirmed with your EMIS coordinator, hey, is everything done? You didn't appeal anything, and they say, nope, we're good. You could come in here and stop reporting them to EMIS. If you have a scenario where maybe you didn't know that they were leaving, maybe they didn't tell you they were leaving until August 1st, and at that point, EMIS is closed, there's no reporting them as separated, you would go ahead and at this point, you're going to put in their separation date and reason, but you are going to, and you got to change their position status to a U, but you have to carry them all of next fiscal year. So they will be reportable to EMIS all of next fiscal year, their position and their FY26 compensation. So that compensation cannot be archived because it has to continue to report. So that is if they did not resign prior to the end of the fiscal year. If they resign prior to the end of their contract, there's notes in here about that. You're going to go ahead and put in their separation date and reason. You will continue to leave their position, or I'm sorry, their status code of a C. Let me show you where that's at. That's this right here, this position status. So in the last scenario, I said you would change it to a U, which means no longer employed by district. If they leave in the middle of their contract, you want to leave them as a C, but separated. U is only used if they did not work any days in the fiscal year that you are continuing to report them in. These last two are a little hairy. It's basically if you forget to enter their separation date and reason, and you don't realize this until the next fiscal year, a lot of times that requires an override. Missing staff person override to our student services team. So these aren't as common, but they do happen from time to time. So go ahead, like I said, if you know that they're leaving, go ahead and update that information. That way next year you don't have to continue to carry them. All right. Month-end closing, I'm not going to go over all of this. This is nothing out of the ordinary. If you want to run your STRS monthly report, you can. It's optional, not required. Same with the STRS monthly reports, optional, not required. I don't think most districts even know these exist, but they are out there under reports and STRS or STRS reporting. You want to balance your payroll account as you would any other month, nothing new here. Reconcile like you normally would. If it's that time that you need to go ahead and process your benefit update, go ahead and do that. And this just falls whenever you would normally do this. It's nothing special at fiscal year end. I would note, if you have staff members that are resigning, or specifically if they are retiring and you're getting ready to pay out their severance, it may be a good idea to go ahead and manually update their leave. So that way you can get an accurate account of what their current balance is, so you can calculate their severance amount. Once you have that all updated, so you've already manually updated and given them their summer accrual or whatever they're entitled to, maybe you convert their personal leave to sick, whatever you need to do. Once you do that, I would go ahead and go to their position screen and unflag their eligibility flags. That way, when you run benefit update for everybody else, they don't get an additional amount since you've already manually updated it. Quarter closing, again, nothing new here. There's nothing special about running your quarter report. We do not close quarters, so nothing special there. This is the same as you would. I do highly recommend running your quarter report, which you have to run it for your 941 anyways. But I recommend running that quarter report monthly, every payroll, as often as your heart desires, and balancing. And when I say balance, I highly recommend a spreadsheet where you're tracking gross wages, taxable wages, all of your taxes for, whether it's federal, state, Kentucky, all of your cities, your Medicare. Have a spreadsheet where you're tracking that every payroll. It does make your life a lot easier. And when we say balance, that's what you're balancing to, because the system just knows what happened, what took place in the system. And your spreadsheet should be an accurate account of what you actually did. So maybe you overpaid taxes because you had a typo and then you had to credit it on the next pay. So things like that should be tracked on a spreadsheet. Again, all of this 15, 16, these are just balancing, nothing new. Your W-2 report. Again, I recommend running that W-2 report at least monthly. It is much easier to make corrections immediately after something happened than waiting till the end of the year and not knowing what happened back in February. It only takes a couple minutes and it can save you hours of time at the end of the year. So have a spreadsheet, run your quarter report, run your W-2 report. Number 18, there is a W-2 reconciliation worksheet. I don't love it. If you have your own, it's probably better than kind of the SSDT version. If you need something to start with, reach out. We have this one. I have one that I used to use that can be molded to fit your needs. And this is all balancing, so I'm not going to spend a lot of time on it. Make sure that all of your outstanding payables have been processed in case you have anything sitting out there that's only paid quarterly. You do want to make sure those get paid out and don't sit out there on accident. Complete any quarter end submissions. I think this is just your 941 at this point. I think there used to be more, but I think that's all we're left with now. You can go ahead and, again, this is balancing balance your city withholdings, making sure everything's on track for that. It's a good time to do that. ODJFS reporting, same you do every other quarter. You do want to look at this. This is not, oh, I ran it, there was no errors, here you go. This does supply information and it can impact an employee's eligibility for unemployment. So you do want to make sure that it's accurate. So I don't know what I'll get if I run this in here, but let's see. Let's hope for the best here. So to generate report, this is your PDF report. To generate submission file, this is the actual submission file that you upload to ShareBase for us that we submit. It's not really a readable file, so you want to generate the report first for checking purposes. But I'll just touch real quickly on what we're looking for on this. So if you have somebody with 0 weeks, but they have wages, while it is possible that they have wages because maybe they were accrued wages, so this is common over the summer with your 9-month employees because you are paying them, but they don't have any weeks to report. So that would be normal. But if you're in the middle of the school year and Bugs Bunny here is a teacher, they have 0 weeks, that's a problem. 9 times out of 10, this is because they do not have a calendar start date on their compensation screen. So that's on their compensation screen. So a calendar start date. So they need a calendar start date and they need to be on a job calendar that has days on it. If they have weeks, but no wages, that's also not correct because they're probably not working for you anymore. They've probably been gone for a long time, but in this case, it's kind of the opposite. They are on a calendar with days on it, but they do not have a calendar stop date. So if we go look at Joyce. So she is on a calendar with, I happen to know that this calendar has days on it, but she doesn't have a calendar stop date. So I need to update that calendar stop date. If you just make it a habit when they terminate from you to add a calendar stop date to all of their compensations, that should prevent this issue from coming up. The paid in month 1, 2, and 3, that's automatically generated by the system. Same thing with the taxable wages. If they live out of state, this first column will have zeros in it, but the ODJFS wages will have an amount in there. And your board members should not be on this because they are not reportable to ODJFS. So just a few notes on that. As always, we will send out a survey link for you to upload that to us because we do submit that on your behalf. Okay, now we're into the actual fiscal year end items. So next couple of reports, please, please, please run those. Please run them, save them somewhere in a file that you can have for later purposes for your auditors. They do get saved to your file archive, but only when you close the month of June. Not every district is in a great habit of closing their posting periods in a timely manner. And if you don't close June until September, these reports will not be correct. So run them, save them somewhere on your computer, call it an auditor's report file, whatever you want to call it, but do run them and save them. So all of these reports, we've got the SCRS surcharge report, the wage obligation, and the benefit obligation. The benefit obligation, wage obligation can be run in 2 different formats. You can do by employee and by account, and they can both be ran in PDF and Excel. 9 times out of 10, I believe that your auditors are going to want the Excel version of this, but the PDF is easier to read. So I would recommend that you run it all 4 ways. Wage obligation by employee, PDF and Excel. Wage obligation by account, PDF and Excel. They're super quick to run. Doesn't take very long. It's just better to have them and not need them than to not have them and need them. So the first one is the surcharge report. So this is for SERS reports, SERS reporting, SCRS surcharge. Now keep in mind, this one doesn't go to SERS. SERS calculates their own surcharge. Oftentimes what this is used for is for districts to determine when they need to pay that surcharge. This will help them determine what account codes to pay various amounts from. So however you want to run this, I think full account code might be a good option, maybe fun, depending on how narrowed down your district decides to pay this invoice. And you can also run this. PDF is easy to read, but your CSV file is going to be, if you needed to mass load it as a PO over in USAS. So you could run this. And these dollar amounts, rarely match what CSRS invoices you for, but it helps give you, I get no data, sorry, this is old decrepit information. Let's see if I run this for 24, maybe I'll. But it will give you a good idea of approximately how much, to allocate. You could create percentages, whatever you need to do. So this is by employee. So you can see how much surcharges do. Again, rarely does this match. It's a starting point. So that's your CSRS surcharge. Next up, we call it the CSRS liability report, which is the wage obligation report in USPS. It is used for GAAP conversion. So this is under reports, wage obligation reports. Again, you have both options, by account, by employee. I would run them both. If we do by employee, you want to make this report as of date. So it's going to default to today, but you want it to be the end of the fiscal year. So again, you can run this as a PDF. I don't know if it's going to give me anything if I go back to 24. There we go. So this is basically their accrued wages for the year, what is left for the year that they are still due. So you can run this as a PDF or as a CSV. Because of this report, it is important that their accrued wages on their compensation screen is accurate. If something went wrong throughout the year where you didn't calculate their days for some reason, and therefore their accrued wages is blank or zero, if you run this report and you have some wild numbers in this accrued wages column, we need to talk, because that does need to be fixed. Because I had a situation with a couple districts last year, the year before, where these accrued wages were off. Most of the time it was because either their daily rate was wrong or their days didn't get picked up or something like that for half of the year. So their accrued wages were way off. And the auditors were questioning why there's such a fluctuation in these reports, because they do look at these and see if they are consistently close to the same amount. So I would run wage obligation by employee, PDF and CSV, and wage obligation by account. Again, you have the same options, PDF and CSV. You want to run it effective the end of the fiscal year. And that is noted on here to do 6/30. And it does say to, with the wage obligation, I would run one just for classified and run one with all appointment types. If you have notes of what your auditors asked for, by all means, just do it that way, but I'm covering all the bases here because it's been a while since I've been requesting these. So run it by classified only and then all appointment types. Your benefit obligation. This is a very similar situation. It is reports, benefits, obligation. You can run it by account, by employee, report as of. So here's the thing with these reports. If you try to run these later on in the year, you can get inaccurate data because of compensations being archived, accruals being given, absences being taken. So it is important that you run this between your June 30th pay and your last pay in June and your first pay in July. Not everybody has the same pay dates. So run them, save them. this is just a note that if you archive compensations before running that, you can get inaccurate data. Okay, now we're into the really important thing about your fiscal year end closing. This is your STRS advance. So again, has to be run before you can process a July payroll. And do not trust that it's going to be correct. I have several districts that I'm working with that it is not correct for various reasons. So this is just some notes of what is required in order for them to be on the STRS report. But basically, it's going to be your certificated staff who pay into SERS. So they have a 450 payroll item. And it's everybody that pays into STRS. So these reports are under reports, STRS reporting, STRS advanced. So first and foremost, this starting and ending date. For several years now, it has been suggested to use 7/1 to 6/30. Last year, I had a situation come up where we were using those dates and there was an STRS employee who was hired middle of the year. They did not work 120 days, but when we entered these dates as the start and end dates of the academic year and ran the report, they were being given 100% service credit. Well, they didn't work 120 days, and we did a lot of investigation with STRS. We went out to their decision tree, we walked through that, and based upon everything that we could figure, they should not be getting 100% service credit. So I contacted STRS directly, I contacted SSDT, had a lot of conversation, and ultimately what it boiled down to is these dates right here. These really truly should be your academic year. So this is a change on the checklist. I have now updated this to say this should be your first day of the teaching contract year, and this should be the last day. Again, in all the years that I've been doing this, I've only seen this come up one time. That's not to say it didn't happen before and we just didn't catch it. But this one was unique, and I found that if we ran this using the actual academic years, it calculated the correct service credit. So use your academic years here. So you have 3 reports out here. You have your advanced fiscal year to date report. This report is going to contain every single employee that paid into STRS this fiscal year. Your advanced positions report, this is going to be your staff members that have worked all of their days by June 30th, but you still owe them wages and will pay them over the summer. Those teachers I call it teachers because most of the time it's teachers. It can be administrators if they do not work in July. They go into advance. Then you have your non-advanced positions report. These are your staff members that have a contract. Usually their contract runs August through July, and they have work days in July. They do not go into advance because those July days and earnings get posted in the new fiscal year. So I'm going to recommend that you come in here and you run your non-advanced positions report first and see what that looks like. If you run this report and you have 3 pages, that's probably not good. That probably means your teachers are not advancing. I'm not going to run it in here because I don't get much. I'm not getting decent information. So I do have some screenshots.
Tanya.
Yes.
I missed that part right there. You said if you run it and it has what?
If you run the non-advanced positions report and it is pages long, it probably means your teachers are not advancing. Your non-advanced positions report should be rather short because it's only the people that are working in July.
Okay, thanks.
You're welcome. So here is my screenshots. So this first section, this is a non-advanced positions report. So if you look through here, I hope you can see this okay. I tried to make it bigger. So these people, days in contract, and I'm sorry, I can't highlight anything on this, but days in contract, this first person is 260. Days worked as of June 30th is 238. This is an administrator who works all year long. 260 days is all year long. They have 22 days left to work, which is about the equivalent of the number of days in July. So that's why they're not advancing, and that would be correct. Same thing with these three down here. I can tell by just looking at this, they likely work in July. Now that's not guaranteed. Maybe this days in contract is incorrect, whatever. But generally speaking, that's kind of what I'm looking at. Then I have these three right here in the middle. Well, what the heck is going on here? This person has days in contract 1, days worked as of June 30th, 0. That means on their compensation screen, their days in contract is 1, but throughout all of the payrolls ran this fiscal year, no day ever got picked up. I happen to know this situation, but that probably means they are on a blank calendar, or maybe they're it's probably because they're on a blank calendar. So anytime you see this is a red flag that you need to investigate this a little bit. This person, again, 120 days, but no days worked, probably are on a blank calendar. So the question is, should they be advancing? I would need to go in and look at this person and say, okay, you are, maybe they're a teacher and they are on a blank calendar because you're entering attendance days or something like that. That could be a reason for this. Then down here, this yellow guy right here, he's in contract 122, but somehow by the end of June, they're going to work 123. This is often a result of the calendar being incorrect, or maybe the days in contract is incorrect. But when you see situations like this is something that you need to look at. If you are new to STRS Advance and you see any of this, or if you run this report and it is 6 pages long, call me, we'll work together. There are so many different things that can come up. It's hard to get to touch on all of them. But like this person right here that's in yellow, if I went and looked at this and I was like, oh yeah, they're on this calendar does in fact have 123 days on it. I just typed in the wrong number in their days in contract. I can easily update their days in contract. This person with their 120 days in contract, but no days worked, well, if maybe they were on a blank calendar and I didn't catch it. So what would we do to fix that? I'm just gonna find somebody here. Oh, of course, I would pick somebody that doesn't have a contract. So if it's the end of the year and their contract work days is 185, but they've got 0 days worked, but they worked. They were just on the wrong calendar. This calendar is archived. I shouldn't be using that calendar. So that they've worked all of their days. You can fix this by doing a compensation adjustment. So I would create and say, okay, they really did work 185 days. I'm going to do days worked 185. When I save that, you can see it updated my days work now to 185. And because it now matches my contract work days, this person would go into advance. That's kind of the key. In order for them to go into advance, their days worked have to equal their work days, and they have to have money left on their contract and pays left on their contract. That's what causes them to go into advance. If their days worked were showing 186, and it should have only been 185. I can do the same thing, except it's just backwards. I would do, -1, and that would take 1 day away from their days worked. If your non-advanced report is your entire teaching staff, again, this is usually a calendar related situation, we can do a mass load. It is a little tedious to set up just because it requires calculations and figuring out who needs what, but we can do that. So just put in a ticket and we can work through that. Hang on, I have got way too many things open. Oh, that's because it's not even in here. It's this right here. Nope, not that one either. This one. Okay. So I would start with your non-advanced because that's usually, again, that should be a small list. And if it's a big list, we know we got lots of work to do. Then you're going to run your advanced positions report. This is advanced payment, but in USPS, it says advanced positions report. It's this middle one. So this is going to be all of your staff who have worked all of their days by June 30th, and you still owe them wages. So what's reported on here is the contract amount due. So this is what you still owe them. So this is basically calculated as contract obligation minus amount paid minus amount docked. That should be their contract amount due. The advanced pickup amount, that should be their contributions. So 9 times out of 10, this is 14% of this contract amount due. If the staff member is has pickup on pickup with increased compensation, that can skew these numbers a little bit because of the pickup on the pickup and the increased compensation. But generally speaking, that's what you're looking at here. If they are a rehired retiree, they should be marked with a yes down here. And they would have 0 service credit because once they're retired, they cannot receive any more service credit. So they would be 0%. I will briefly talk in a minute. There is a way to balance this report right here. It's a little bit complicated, but I did create an Excel document that kind of walks you through how you can calculate this amount. So we'll look at that in a second. The final report is your fiscal year to date report. Now, again, this report has everybody that you have paid into STRS and that has contributed to STRS. There's a lot to look at on this. The service credit. So this is calculated depending upon whether they are marked full or part-time on their 450 record, how many days they've worked, start and stop dates. This is what I was referring to earlier, where we had somebody who worked, I don't even remember what it was, like 110 days or whatever it was, but they were getting 100% service credit. And when you walk through that scenario on SS or STRS's website, it said, no, they don't get 100% service credit. So for STRS days, if you run this report right now, the days will reflect what is true as of today. If you look at this and it says 179, but you know your teachers work 185, that's only because you have not ran the payroll that includes those last 6 days. So as long as they are up here and they're going into advance, it's doing what it needs to do. It knows, the system knows, oh, by the end of June, they're going to work all of their days. And by the time you run that last pay in June, this should equal their actual days that they worked. in this column, if you had a teacher who had dock days, the dock days will be reduced from their contract work days. So if they were supposed to be 185 and you put 20 dock days in, it's going to reflect 165 in here. If they worked extra, maybe they had extended days, and you put those into attendance, so now they have 185 plus 5 extended days. They should be showing up with 190 days because it does go out and look at your attendance days. The earnings, this is what they earned in the fiscal year. The non-tax deposit pickup amount, this is what you have, their contributions to date. The advanced amount is what you will what they will contribute over the summer. So this advanced amount matches this up here, this advanced amount on the advanced positions report. And then your non-tax total is their total contributions for the year, which should reflect their annual report amount. Again, we have our rehired retiree, they're marked as such, and they have a 0 service credit. They have days on here still, but they have no service credit. Let me see, go back to my notes here. Oh, I did completely. Before you run this, if you know that you have an employee that you were going to pay out early, maybe you're going to pay them out the first pay of July because they're retiring or whatever, go ahead and update that compensation before you run your advance. It helps the advance report calculate quickly. Missy, if you're still on here, here's your request. My dog has come to visit for the Missy wanted him to come in and say hi. I'm like, nobody wants that. Give me 1 second here. I'm so sorry. Okay, so yes, so if you know they're going to pay out, go ahead and update that compensation screen, reduce your pays and contract, so that gets calculated. Additionally, if you know you're going to dock somebody during the summer, so, and I know we don't always know that, sometimes it just happens, but if you know that you need to dock them, go ahead and you come in and now you want that. So sorry. Okay. So go to future pay and you can enter that dock amount. So just create, you can find your employee, and I'm just going to put a, oops, I'm just going to put dock, and maybe I need to dock them 1 day. I can save that. And then when I run advance, it comes out and it sees that that's out here, and it'll go ahead and reduce their advance amount. 9 times out of 10, when a district remains in advance at the end of the fiscal year after they've paid all of their summer pays, if they're still in advance, it's because they've 9 times out of 10, it's because they've docked somebody over the summer. It's not a big deal. We just need to know about it. Sometimes you need to contact STRS and say, hey, my annual report said this amount. I actually paid you this amount. What I paid you is correct. I had to dock them. But if you do this in advance, it'll pick that up. If you're not ready to dock them yet, you could then delete it after you run your advance report. So those are both noted on here. Okay, so we're checking the service credit, making sure that people have the correct service credit amount. The number of days are correct. We're double checking the earnings. I just realized I did not get a screenshot of the totals. Let's see. So this is the last page of the fiscal to date report. And you have a bunch of totals on here. So on the checklist, I have listed what that should be. So your non-tax deposit pickup should be the amount of the $591,691 paid. The advanced amount is the $591,691 to be paid over the summer months. And then you get a grand total of those two above. So I'm referring to these two numbers, and then this one equals those two added together. So I briefly mentioned this, I do have a spreadsheet. I tested it again this year. It still appears to work, but it always it's kind of a cumbersome situation. But I created this to help districts balance these numbers. If you are interested in using it, I can send this to you and you can work through it. And if you get to the point where you're like, I need help with this, let me know, I can help you with it. But it just kind of gives you a way to balance those numbers. And then the advanced amount calculations tab, this is how you can balance that advanced report to make sure that the amount that's on there is in fact what the system is showing, what you're calculating for your own staff. So if you want,
Why can't we just trust the system?
Well, I wish we could. I wish we could. I will say this last one, this advanced amount calculations, is normally correct as long as you get your advanced report correct, because it's just a system calculated thing. But some people like to double check and make sure. And then, some districts have their own spreadsheet where they know this is what my certified staff is. I know this is what they should be advancing. I want to double check that. So if you're interested in this, let me know. I'll send it to you. Or maybe I'll just send it out and you can ignore it if you want to. Okay, this is still on here for this year, but it may be going away next year. But once you have run your advanced report, so you've ran all of these, you have balanced, you feel really good about it, please, please, please look at this. Please do not take it for what it is. Please look at it, make sure it's correct. Again, this non-advanced should not have more than a couple of people on it. Fixing this later is not fun. I promise. I've had to do it a couple times. It's not fun. We don't want to do that. So please pay attention to it. But once you're good with everything, if you would like a backup done, and we hold that for a year or so, just in case STRS comes back and says, hey, your annual report wasn't right, or these people aren't in advance and they should be, if we need to go back, having that backup from just after you balance these reports is helpful. If you don't, most of the time, because we back up twice a day, we can usually pull a backup that would be pretty close. It may not be, maybe you did a few minor changes that we would just have to update. So it's not like if you don't request that backup, you're dead in the water. We have options. So it is an option. Next year, we're doing away with it just because we are transitioning our hosting environment. So it will no longer be needed. But so if you want that, you can email us. But if you say, hey, I want a backup, don't run STRS until we tell you we have your backup. Because if you run it and then we run your backup, well, now your backup has your advance on it. So usually we shoot back with, hey, have you made any changes since 11 a.m. this morning? And if you say no, we say, okay, go ahead and proceed. We'll copy your 11 a.m. backup. So if you decide to do that, once you hear back from us confirming you're good to move forward, you can go ahead and create the submission file. Now, please note, creating the submission file does not submit it to STRS. There is an additional step for that, which is 33 down here. So you're going to create your submission file. When you create that, it's going to go to your downloads. It also goes out to the file archive. You're going to save that somewhere. If you are a district that has a merge file, there's not very many. There's maybe 2 that have a merge file. You would know it, you would receive it from a third party. And we would need to do the merge file, but I'm going to skip over that because it's not common. So generate your submission file. Then you have to come in here to the same screen and say, okay, choose my file. I'm going to choose my file. I'm going to find that submission file I just generated. I'm going to select it. And then once I've selected a file, it'll say submit uploaded file to search. And I'm going to click that button. That is actually what submits it to STRS. Clicking this button does not. This is what sends it. We've had that happen in the past where districts like, oh, STRS said they didn't get my file, but I know I ran it. I'm looking at it. There is a way to check, to verify that you did submit it. You go to core organization, and you would have right here, you have this submitted to STRS. That is going to have a date and time stamp. And that should reflect the date and time that you submitted it. So if you come in here and it says 2025, that's not right. That was last year. And I believe that is noted on the checklist. Yes. So number 34 here is go to core organization to look for that timestamp. That's how you can confirm it did in fact go to STRS. Once you're done with that, we keep track of everybody that's done, just in case anybody's struggling and needs help, we can reach out to them. But if you just let us know that, hey, you've submitted your STRS data, we just mark you off the checklist real quick. So that's the nitty gritty. Now we're on to your post fiscal year end. You can create your posting periods. Again, you cannot post the July payroll until STRS Advance has been run. While you're in STRS Advance, do not change their position number. You cannot pay them a regular pay type. If you use a duck pay type, it does impact the amount paid back. So just a couple of notes. If you have a teacher who is moving to an administrator in the new fiscal year and they are going to be paid on both positions at the same time, and the administrator position has pickup on pickup, please contact us. There is a very specific way that we set up those payroll items so that you can pay both positions and their STRS gets withheld at the appropriate rate. So once you have completed all of your payments for the summer, whether that's the June and July pays, or maybe it's, the July and August, or maybe it's July of August. I know we've got some districts transitioning to paying out the first pay in August. But once you're done, so you know that all of your compensations from that fiscal year have been paid out, go in and let's check to make sure that your STRS has been paid back in full. So on this same screen, when you run your advance, this will update with your advance amount. This box gets checked. And then as you run your payrolls, it calculates the advance amount that you're sending, and it will update this. So this remains the same. This should continue to increase. Once you make that final pay of the contract year, this should both revert to zero, because that means you paid back exactly what you said you were going to. If you do not, even if this is off by 1 penny, you will stay in advance. 1 penny is usually a rounding issue, and we typically just take you out of advance. But there could be a bigger issue. It could be off by a couple $100, and that could be a dock. Or it could be that somebody didn't get paid out their compensation. I have seen that as well. So it's better to catch that right away. I usually try to look at this the spring of the next year. Obviously, I don't have time to check 36 districts in September and August, because it's a very busy time, as you all know. So once you're finished paying out all your contracts, pop in here and make sure that these are 0 and this box is unchecked. If that's not the case, contact us. We can look through and see what happened. And this just goes in to talk about, like, if you don't come out of advance, this is the process that we use to look for that. I'm not going to go over it. You can try it on your own if you want, or you can just reach out. We'll help you with it, because it can be a little bit of a task. These are just reminders for your new fiscal year. You want to make sure you're working on those job calendars. You can do that now. You do not have to wait. Start working on those now. Your new contracts, you can start working on your new contracts as well. Which we had, if you missed that new contract meeting, that is available on our YouTube channel. It is on our website, the link for that, which is under finance, and you can just do the first one, the state software links and training, and then click here for HCC training recordings. Click that, and it's this one right here, this USPS new contracts 2026. So I think it's about an hour long. So watch that if you have any questions about new contracts. If you watch it and you're still going, what? A couple other notes, resetting or converting your personal leave to sick, if that is part of your district's procedure, resetting your personal leave, resetting vacation. These are more reminders. I know that we have some very, very unique personal leave situations out there. If you have something unique that is in the contract that you need to work through, contact us. We can help you. I've figured out some crazy ways to make this work, and SSDT has made some improvements to these, the benefit update and projection screens that allows you some more flexibility. That's all I got. That is, I know that's a lot. Like, the 2 important things to take away from this is look at STRS Advanced right now. You don't have to wait. Do not forget to do your NC1. Just one final note, because it was asked in prior meeting, vacations. I am out of the office June 8th through quit shaking your head. I see that. June 8th through please. June 8th through the 19th. I'll be back on the 22nd. So during that time, please make sure you're putting in tickets. That is going to be the best way for HCC staff to keep track of things, to take things in order, to make sure you're getting the most timely response possible. If you call or put in emails, sometimes those could get overlooked or missed in the shuffle. So if you put in a ticket, that's going to be the best way for us to keep track.
Who approved that?
Exactly. I agree. Who approved that vacation time? You just can't see me shaking my head.
I'm so sorry. I'm so sorry. It's the only time I can take it. If I could take it at the end of July, trust me, I would absolutely love to do that. But my son is in marching band, and it is his last year, and maybe I'll get to change it to the end of July moving forward. But
Give us notice next year and we'll all take vacation when you're gone.
That's what I'm saying. We all should leave. What are they going to do then?
there you go. Yeah, the 19th is technically a holiday. I could have worked that day, but it is a holiday. So any question besides why am I going on vacation?
I don't think it was a why. I think
definitely
it was
deserve it.
no.
Trust me, I pay for it when I come back. Don't have no fear. I usually need a vacation after we get through the fiscal year end. Let's see, there is This isn't a question not related to year end, but while I have all the payroll folks here, just wondering, does anyone do a cafeteria fund where employees elect to take money from their checks to apply to their lunch account? Are you looking for are you looking for like a process of how you do that? Anybody do that?
No.
Sounds like crickets over here. Okay. I mean, why not? I've seen all kinds of crazy things, payroll deductions for computers or things like that. So it seems like it would fit into that.
Please keep that under your hat. Do not let our treasurer know you're not.
Hmm.